morning, everyone. I hope you are able to see me and hear my voice. We had some internet connectivity issue today.
Yes.
Are you able to hear me out?
Yes, sir.
Yes, sir.
Okay, fine. Uh, so, good morning, everyone. Yesterday, I had uh, posted on the WhatsApp group a Word document that contains notes relating to capital gains. Most important, the details of Section 54, and we also had things like the problems that are associated with the capital gains. So all that particular things was mailed to you, was sent to you on your WhatsApp group. At the same time, an assignment was also given. You are required to study those particular problems and solve those problems. Remember, it is difficult for me here to solve and interpret that particular problem, so I have given you ready made problems. Please solve those particular problems, and in case if you have difficulty, please come back to me. I will help you how did we arrive at that particular solution. Clear? Now this is the method that I'm going to follow for the rest of the taxation classes, because since if you observe the size of that particular problem, it is not possible for me to solve that particular problem here because we have a lot of technical issues. That is the reason I have given you ready made problems, and the problems are quite exhaustive. Your duty is to study all those problems, and in case if you don't understand, please come back to me. I will definitely explain to you why did we get or why that particular entry was done there. That's one part. I also told you yesterday that today I'll be discussing one of the very important sections of capital gains, that is section 54. Accordingly, I expect that you have read section 54. I want you to read only section 54. So
Yes, sir.
if you have read that section 54, things will be
Yes,
easy for
sir.
you to understand. Okay. And then once we are done with that particular section, we will go to indexation problems. That's one part. Parallelly, I had given you another assignment which is related to investment management. I hope you have seen that particular assignment. First, you create a group.
Yes, sir.
You create a group. You select the sector. You select 12 companies in that particular sector. And then I'll tell you how do we download the data from NSE website. Okay. So these preliminary activities you have to do. The earlier you do your groups, the earlier you select your sectors, the more easy it would be for you to find out companies. If you delay in forming of a group, then everything will go for a toss. Then you have to compromise on whatever companies you get. Please don't blame me for that. Clear? So now let us move on to where we had stopped. Okay, I had stopped at solving a problem on depreciation wherein the WDV was 0 and when the block was empty. Clear? So we had stopped at that particular point of time, and then from today we will continue from where we had stopped. So all these problems were discussed yesterday. Okay. I think you have got these slides also. So today we will go ahead and see all these sections which come under exemptions from capital gains. Okay. Now, for simplicity's sake, I have just divided these sections on the nature of the sections, that is the section numbers, and on the vertical line, I have put the characteristics. Who is eligible, what is the asset, what is the holding period, all those things. Okay. Everything has been mentioned here. Clear? So this is not only one slide, it is a continuation of slides, but because due to space constraint, I have to shift to some other location, some other slides. That's the only thing. Clear? So let us start with section 54. Now, what is section 54? Is basically, it tells you that whenever you have a capital gain by selling a capital asset, a substantial amount of money would come to you. Now, if you do not invest this particular money in appropriate sections or under appropriate sections, then whatever capital gain that you have, the entire amount is going to be liable for taxation at a flat rate of 20%. So, in order to avoid that particular tax, the government says you have a capital gain, you do not want to pay tax on that capital gain, then you reinvest this whatever money that you have into some or the other investment avenue. Why does the government do this, or what is the reason for this? First, it will prevent circulation of black money. One, that is the reason why government says that if you have a capital gain and if you do not want to pay tax, you either invest, or if you don't want to invest, you pay tax and then do whatever you want to do with the money. So there are two things: it will help the infrastructure development of the country. Second, it will prevent misuse of money. And third, if you do not if you want to enjoy that particular money, you pay the tax, and remaining money whatever you have, you can enjoy this particular money. To start with this particular section, I will start with an example that I had already quoted yesterday. I purchased a house 5 years back or 10 years back for 35 lakhs. I have sold the house for 50 lakhs. 15 lakhs is my capital gain. Now, please understand, let us take this particular example of a residential house. Okay. Now, first of all, we are trying to understand whether we qualify under section 54. So slowly we will go by all these sections. So whether we qualify under section 54 is what I'm going to tell you now. First is, am I eligible? So if you want any person to claim exemption from capital gains, he has to be, just a minute. He has to be an individual or an HUF. Okay. Only an individual and an HUF is allowed to claim exemptions. Okay. So that is the nature of the SSE, or which SSE is liable to claim exemption. So it is either an individual or an HUF. That's point number one. Second, this exemption under section 54 is available only when you have sold, please understand, only when you have sold residential house. RH stands for a residential house. If you have sold a residential house, only then you are eligible to claim exemption under section 54. That's point number one. Second, after selling this particular house for 50 lakhs, cost of acquisition of this house was 35 lakhs. I have a gain of 15 lakh rupees. I have 3 years time to reinvest this particular money. That is what it says. Holding period for original asset. I have 3 years. Okay, I cannot buy the house immediately. What does it mean? It says that if I have to sell this particular house, if I have sold this particular house, I should have held that particular house for at least 3 years. See, understand one thing. I'm trying to explain you that we are trying to claim exemptions from capital gains under long-term capital gains. Now, if any asset has to be declared as a long-term, the first criteria is that asset a physical asset or a financial asset? In my question, it is a residential house, so definitely it is going to be a physical asset. If it is a physical asset, you have to hold that particular asset for 3 years or 36 months. So the first condition is section 54 is applicable for individual and HUF. The property in question or the asset in question has to be only a residential house and not any commercial property. It has to be a residential house. Second, if I want to claim exemption under section 54, I should have held that house for at least 3 years. That means if I have sold the house in 2020, I should have at least purchased the house in 2017. I have to hold that house in my custody for at least 3 years. That is what it says. Clear? Now, I am going to the next slide because I have to explain all these things under section 54. Clear? Now, again, if I have to reinvest whatever gain that I have, if I have to reinvest this house, I have to reinvest only in a residential house. That means if I sell the house for 50 lakhs, my cost of acquisition of the house was 35 lakhs. I have a gain of 15 lakhs. The condition is if I want to claim benefit of section 54 by not paying tax, then this 15 lakh rupees that I have, this 15 lakh rupees that I have as a capital gain, I have to reinvest this money only in a residential house. Only then I will be able to claim exemptions. If I don't invest this money into a residential house, if I invest in some other assets, then I will not be eligible to claim exemptions. That is what the condition says. So here, reinvestment has to happen in a residential house only. The time that is given to me, the time that is given to me to buy another house is 1 year before or 2 years after the purchase, or 3 years for construction. So if it is a ready-made house, maximum of 2 years would be given to you. If you are going to construct a house, then 3 years time is given to you. So within these 3 years, if you do not invest this 15 lakhs in either buying a ready-made house, constructing a new house, then at the end of third year, you are liable to pay 20% as tax. 20% on 15 lakhs as tax. Clear? It might so happen that you have got a gain of 15 lakhs, but right now you don't see any good investment avenue, but you still do not want to pay tax. What you can do is, okay, you can, I'll come to that, okay. Uh, Whatever is the capital gain or the amount invested, whichever is lower, that amount will be exempted from tax. Okay. Consequently, if the asset transferred is within the 3 years, then exemption on given is deducted from cost of acquisition of the asset, of the new asset. Now, this part you will come to know only when you solve problems. Even if I explain you 10 times, you will not be able to understand this. So only when we come to the problem part of it, you will be able to understand what I'm trying to tell you. Okay. Now, what does it say? If I want to claim benefit under section 54, and if I don't find any house which I can purchase right now, nor do I find any open land wherein I can purchase that particular plot and construct a house, in this particular case, and I still don't want to pay any capital gain tax, then what I need to do is, as I said yesterday, you have to open an account with State Bank of India under the head capital gain deposit scheme. You have to invest all that money into that particular account. If you invest that money into that particular, if you transfer that money in that particular account for next 3 years, even if you don't buy the house, no tax is liable to be paid. But after 3 years, if you don't use this particular money, then you will have to pay. No, if you will have to pay the money, and you have to pay the tax on this particular money. That is what this is. If capital gain deposit scheme money is not utilized, okay, then at the end of the third year, you are going to be liable to pay tax. That is what section 54 says. Any doubts in this? I repeat once again so that things are clear. First, if I want to claim exemption under section 54, first thing is I have to be either an individual or an HUF. Point number one. Second, if I have to claim exemption under 54, the asset that I should have is a residential house only. Except residential house, you cannot claim benefit under section 54. Next condition is, if I sell this residential house today, the condition is I should have held this particular house for at least 3 years to be declared that particular asset as a long-term capital asset. So I should hold that particular asset for 3 years. Next, after I sell this particular house in 2020, which I had acquired in 2017, if I sell this house, whatever capital gain that I'm going to have, if I do not want to pay any tax, I have to invest this particular money only by buying another residential house. And the time given to me is 1 year before or 2 years after the purchase, okay, or 3 years if I am going to construct that particular house. Next condition, if for example, if you do not find any suitable property, then you have one option left. You open an account in State Bank of India under the head capital gain deposit scheme. Put all these 15 lakh rupees into that particular account. You have 3 years. In these 3 years, you can either buy a ready-made house or you can construct a house. But you should need to see that within the 3 years from today, that is till 2023, I have time to either buy build a house. If I do not do anything in these 3 years, at the end of 3 years, whatever money that I have transferred in that capital gain deposit scheme, entire amount is going to be liable to pay tax at flat 20%. That is what it says. Acha, it might so happen that, yes, Narayan?
Sir, why only State Bank of India?
uh, why only State Bank of India? It is one of the largest public sector banking. One, branches are available across all nook and corner of the country. And third important thing is all government accounts are with State Bank of India. And if income tax authorities
Okay,
have
sir.
to monitor your activity, then definitely they will have, the income tax authorities always have an account with State Bank of India. So it's a, basically it's a government
Sir,
government
but
of India bank.
people can,
Yes.
sir, but people can open the account for during every 3 years, right?
What happened?
Like once the 3 year period is, sir, like once the 3 year period is over, then again they can open for the
No,
account for three
no,
years.
no. It cannot happen. The reason is, from the
Okay, sir.
date of transfer, they will check 3 years. Suppose I have sold the house today. What is today's date? 5th November 2020. So I have time till 4th November 2023. I have time to either buy or construct or acquire a house. If I don't do that within these 3 years, then you cannot open another account in probably in some other bank by that time. You cannot open any other account and transfer this money into that particular account. The bank is not going to accept it. They will check from the date of transfer. See, Narayan, today you have signed a sale deed, right? From the date you have signed the sale deed
Yes, sir.
till next 3 years, what is the bank is going to check?
Yes, sir.
Any doubts?
No, sir. Thank you.
Narayan, I'm not able to hear you.
Excuse me, sir.
Yes, Swapnil.
So how long we need to keep in that saving account and
3
the
years.
acquired sum?
3 years. 3 years.
3 year we can withdraw.
3 years you can hold that money in the capital gain deposit scheme.
Sorry, sir. Pardon.
Suppose, Swapnil, if you have sold the house today, and if you do not intend to buy the house, another house immediately, you have 3 years time to buy another house. But even at the end of 3 years, if you have no intention or if you do not show any sign of buying a house, in such case, at the end of 3 years, whatever money that is going to come out at the end of 3 years, before you come to know, the bank would have already intimated income tax authorities, and the income tax authorities would have directly cut 20% amount from your account, from that money, and only you will be allowed to withdraw the remaining money.
Okay, so for 3 years we need to keep that money in the saving account.
Not saving account, capital gain deposit scheme account.
Deposit scheme. Yeah, that. Okay. Okay, sir.
Right? I'll give you a simple example. Let's see how much do you how much can you answer? Yeah, Rashmi.
So I have a doubt from previous slide, sir.
Yeah.
Yes, sir. So the time limit here, sir, 1 year before or 2 years after if purchased. So I didn't get that.
Okay. 1 year before or 2 years after if purchase, and 3 years for construction.
So I got this 3 years for construction.
Huh.
I am not getting this 1 year before, sir.
1 year before means, suppose see, suddenly you cannot get up from your sleep and say that tomorrow I want to sell my house, right?
Yes, sir.
Right. So selling a house takes a regular plan, or it takes a long time, right?
Yes, sir.
Now, what when you sell a house, are you going to stay on the road?
No, sir.
So somewhere you would have made your arrangement.
Yes.
somewhere you would have made your arrangement, right?
You're not audible.
No, I'm trying to tell you. Just think logically. Suppose tomorrow, Rashmi, you decide to sell your house. When you sell your house, are you going? You need to have some place to stay somewhere else,
Yes, sir, definitely.
right? So, and normally, I'm saying normally, no person will ever sell his existing house and go and stay in a rented house. At least that thing will not happen.
Yes, sir.
Okay. Now, if you're selling your house, you would have already made a planning of either buying another house. So, what does it say? Before you transfer, suppose tomorrow you are going to sell your house. So, 1 year, if you acquire a house 1 year before, that means in
Yes, sir.
2019, if you have acquired the house, you are still eligible to claim this benefit. That is what it says.
Yes, sir. Got it, sir.
You're getting it? So one
Yes,
year
sir.
before or 2 years after, that means today you sign the sale deed, today you sell your house, you have 2 years time to acquire a ready-made house. That means if you are buying a flat, you have 2 years time to buy that particular flat. But if you are constructing a house on your own, then 3 years time is given to you.
Yes, sir.
Getting it?
Yes, sir. Got it.
Okay, now tell me, Rashmi, I have sold my house for 50 lakhs. Capital gain is 15 lakhs, 1 5. And out of this 15 lakhs, I purchased another house for 10 lakhs.
Yes, sir.
So, which means there is still 5 lakhs remaining in my capital gain deposit scheme, which I have not utilized because I have acquired the house for 10 lakhs. What will happen
Yes,
to
sir.
that remaining 5 lakhs?
So after 3 years, it will be taxed.
Yes, after end of the 3 years, okay, this amount of 5 lakhs which is available, that is going to be taxed at 20%. That's it.
Yes, sir.
Yeah. Anyone has any other doubts in this? Okay. Now, the way we have seen for a residential house, the way we have seen it for a residential house, now we have to look for an urban agricultural land. Remember, it is an urban agricultural land. Okay. Suppose you have a agriculture land which is situated in an urban area and you decide to sell that particular house. Who is eligible? Only an individual is eligible. No other person is available. No HUF, no company, no firm, nothing. Only it is applicable for an individual. That's point number one. Second, the nature of the asset, it has to be an agricultural land. And that too, it has to be in a urban area. Please understand this. If agriculture land is situated in a rural area, section 54B is not applicable. Some other thing gets applicable. So section 54B is applicable only for urban agricultural land only. Clear? Next. That particular asset, you should have held that particular asset for, or you should have used that particular asset for
So
at
your voice
2 years.
is breaking.
Yeah, any doubts here, please? Others, can you please mute it? Yeah. So that agriculture land should have been held by you or parents for at least 2 years for the sake of agriculture. Can you see the screen? Am I audible?
Sir, voice is not clear. It's breaking.
Can you see it? Okay. Yeah, can you see the screen, please?
Yes, sir.
Okay. So the condition is here it has to be a agriculture land. Okay, that too it has to be situated in urban area. Only an individual is eligible. That agriculture land should have been used either by you or your parents for agriculture. Please understand, it has to be used for agriculture. Clear? Next, if you dispose of that particular agriculture land, okay, and after disposing that agriculture land, let us suppose you have agriculture land of 1 acre. You dispose of that agriculture land for, let us say, 60 lakhs. Cost of acquisition of that agriculture land is, let us say, 20 lakhs. So you have around 40 lakhs of capital gain. Now this 40 lakhs of capital gain that you have, if you do not want to pay interest on this particular 40 lakhs of capital gain, the option that is available for you is you can reinvest this money to acquire another agriculture land either in rural area. So RAL stands for rural area, rural agriculture land, or you can acquire urban agriculture land. This is what it says. So here either you can acquire a land in rural area also, or you can acquire a land in urban area also. Okay. The time limit that is given for you is 2 years. Okay. You have within 2 years, you have to, from the date of transfer, you have to invest this money. Okay. Next, capital gain or amount invested, whichever is lower, you can claim exemption. Whatever is the capital gain or the amount that has been invested, whichever is lower is going to be considered for exemption. For example, I have an agriculture land. I sold it for 60 lakhs. I had acquired that land for 20 lakhs. Okay. I have 40 lakhs of capital gain. Okay. Now, out of these 40 lakhs, if I invest 35 lakhs to acquire a rural agriculture land, in this particular case, my capital gain is 40 lakhs. I have invested only 35 lakhs, whichever is lower. So I will be able to claim exemptions only for 35 lakhs, which means the remaining 5 lakh rupees, if I don't utilize it within the next 2 years, I have to pay tax on that at 20%. Clear? That is what it says. Okay. Exemption on given is given on the deducted is deducted from cost of acquisition for the new asset. So again, when we come to problem, all these things will be clear for you. If you do not find any suitable rural or urban agriculture land, you have 2 years time. In these 2 years, if you do not want to pay tax, again, you have to open an account with capital gain deposit scheme with State Bank of India. Transfer all these 40 lakhs into that particular account. You have 2 years time to invest. Within these 2 years, if you invest, well and good. If not, any unused money at the end of 2 years is going to be liable for taxation at straight 20%. Any doubts in understanding section 54B? Any doubts in understanding section 54B?
So that quantum of exemption is there, no, sir? Like it's same as under section 54. That amount investment in new asset plus deposited
Yes.
in capital. How it is, so like deposited in capital gain account in bank. In the last example, as you said for the Rashmi, like the remaining amount is 5 lakh. In that 5 lakh, if we invest before 3 years,
Yes.
then that we have to take, no, sir, whichever is lower.
No. Understand. I'll give you an example. This agriculture land itself. I sold the land for 60 lakhs. I
Yes, sir.
acquired the land for 20 lakhs. What is my capital gain?
40.
40 lakhs is my capital gain. Okay. Now I have two options. One is the nature of
Yes, sir.
asset that I have sold is a urban agriculture land. If I do not want to pay tax, there are only two options. Either I can acquire an agriculture land in rural area or an agriculture land in urban area. Clear? So I decide to acquire a land in rural area.
Yes, sir. Yes, sir.
So I try to find out a suitable land
Yes,
in
sir.
a rural area. I don't find it. Right? So what do? I don't want to pay a tax.
Yes, sir. Yes,
I
yes, sir.
open an account with State Bank of India under capital gain deposit scheme, transfer all these 40 lakh rupees. Within 1 year from this particular date of opening the account, I find a suitable land. And the price of that particular land is, let us say, 25 lakh rupees.
Yes,
I
sir.
have invested 40 lakhs. The land is available for me at 25 lakhs. I acquire that particular land for 25 lakhs. At the end of
Yes,
2
sir.
years, still there is 15 lakh rupees lying
15
idle
lakh.
in my account. I have option
Yes,
another.
sir.
I have option to invest that only for 2 years from the date I have opened that particular account. If I don't utilize that 15 lakhs within these 2 years, then on 15 lakhs I have to pay 20%, and the entire money, the remaining money, I can utilize it for whatever purpose I want.
Yes, sir. Yes, sir.
Got it? Yeah.
Yes, sir.
Yeah. Somebody has raised his hand. Yes, Rashmi.
So I had one more doubt. We
Yes.
can reinvest the money only once or more than once, sir.
Till the time
Say
you
suppose
have,
as you gave the example, right? Capital gains will be gain amount will be 15 lakhs. I invested 10 lakhs out of it. 5 lakh is left. I can invest it again or
see,
what,
Rashmi,
sir?
you have for a residential house, you have 3 years time. Do whatever you
Yes,
want
sir.
with that 15 lakhs within these 3 years for investment.
So it can be reinvested more than once, sir.
You acquire uh, 5 houses, no problem.
Yes,
They
sir.
want to see to it that this money goes into a residential house only. And if this money is not going to go into residential house, then you have to pay 20% tax. The remaining money you do whatever you want. Nobody is going to ask you.
Yes, sir.
Same case with agriculture land also. I told you I have a 40 lakhs of capital gain, but out of these 40 lakhs, I can use this 40 lakhs to acquire 3 acres of land, 2 acres of land, till the time that 40 lakhs is exhausted. Within 2 years, I can use that money.
Yes, sir.
Are you able to understand? Okay, I'll just reverse this example.
Yes, got it, sir.
Okay, Rashmi, now answer me. I have got a capital gain of 40 lakhs. I acquire another land in an urban area, which is 50 lakhs.
Yes, sir.
Right? What is the exemption that I will get?
So I have a capital gain of 40 lakhs,
Yes.
but I acquire an agricultural land of 50 lakhs.
Yes, I put 10 lakhs from my savings and I purchase another agriculture land worth 50 lakhs. What is
So
the amount of,
exemption will be 40 lakhs.
yes, the exemption will be 40 lakhs. Clear?
Yes, sir.
Okay. Now, the way section 54 talks for a section 54 talks about a urban agriculture land. Okay. Section 54D talks about an industrial land or building. Are you able to understand? So this particular section talks about acquisition of an industrial land or a building. Okay. Same things here also. The time given to you is 2 years, and within these 2 years, if you don't utilize this money, you are going to be taxed at 20%. Okay. So section 54D talks about acquisition of an industrial land. Section 54G talks about acquiring an industrial land, plant or building or machinery, which is they are trying to shift to a rural area. Okay, so this is for a rural area, this is for an urban area. Section 54GA is for same, again industrial land, building, plant, machinery for a special economic zone, SEZ. Are you able to understand? It is for a special economic zone. Clear? Next, section 54 EC talks about any asset. Suppose you have a shop. It is not a residential house. It is not an urban agriculture land. It is not an industrial area, nor it is a plant and machinery, but it is a commercial property. Right? In this particular case, if you have a commercial property, you can claim benefit under section 54 EC. Okay, what does it say? I'll just explain to you because this section is important and this section is very commonly used. Section 54, any person, please understand, any person is eligible to claim benefit of section 54 EC. When I say person, it is an individual, a firm, a company, an HUF, body of representatives, body of individuals, association of persons, and artificial judicial person. All are eligible to claim benefit under section 54 EC. It could be any asset. Okay, it could be any asset. When they say any asset, including this, it is applicable for any asset. Okay. Next is nature of the asset. It has to be a long-term capital asset. Now, in this particular case, the government says that if you have a capital gain from a residential house, if you have a capital gain from agriculture land, if you have a capital gain from industrial land, whichever part it is situated in, and if you do not want to invest your money in any of these conditions, then you have only option is you can invest your money in National Highway Authority of India bonds or Rural Electrification Corporation bonds. Okay, only this is applicable. If you do not want to invest in any of these, but still don't want to pay capital gain tax, then you have to invest all your money into government schemes, that is National Highway Authority of India or Rural Electrification Corporation. Okay, and the time limit given to you is only 1 month, because you don't have to think now. You don't have to look for a land, you don't have to look for a house, you don't have to look for any other thing. Okay, you have to just sign a paper and this money will be transferred from your